Hi everyone, welcome to TSAM Digital. My name's Amy and today I'm joined by Harald Walkate, who is the founder of Finding Ways Ahead at the University of Zurich and also a senior fellow at the Centre for Sustainable Finance. So welcome Harald, it's great to have you.
Yeah, great to be with you, Amy. Thanks.
Okay, so today we're going to be talking about blended finance. So just to get started, could you tell us a little bit about your background in sustainable finance and what you've been doing in your different roles?
Sure. Yeah, no. So, quick overview is I started looking into ESG and sustainable finance when I was at Aegon many years ago. This was in 2009, and over the years have focused more and more on ESG and sustainable finance, impact investment. Ended up being the head of responsible investment at Aegon. I was also the head of ESG at Natixis Investment Managers. And so, as you said, I'm now an independent consultant and also affiliated with the University of Zurich, their Center for Sustainable Finance. And so, yeah, sustainable finance, impact investing is pretty much everything that that I do today.
Well, that's great
Um,
to hear. Yeah, we need more people like that actually. And luckily, it's a very interesting industry as well. So on that note, then, just to dive into blended finance today, because I know that there will be a lot of ESG professionals out there who are already familiar with it, but for those who aren't, could you kind of summarize how this structure works, who the parties are, where the cash flows, and kind of just explain the model a bit more?
Sure. Yeah. So what's the defining aspect of blended finance is that public sector or philanthropic investors invest in projects together with private sector investors. So, for example, it could be a government or a development bank working together with a pension fund. And then the idea is that the public sector, or what's also called the concessional investments, basically mobilizes or catalyzes the private investments. And so the fact that the government, for example, invests in a project allows the pension fund to also come into the project with their capital.
That's great. And we have a lot of asset managers in our network, as you know. So can they kind of come into the situation easily? Like I know it's a lot of asset managers who tend to get involved with the development banks and partner up, as you say, but the asset managers just sort of conduct their business as usual in these models, or are there any differences?
Yeah, so I mean, so certainly there are asset management firms that are active in blended finance already, but it's certainly not enough uh, in order to address problems like climate change and some of the other problems identified in the Sustainable Development Goals. For example, we will need much more private capital brought into these projects and activities and solutions, and because many of these activities aren't really at market rates yet in terms of investment return and risk. They basically need to be made investable by involving governments or development banks or philanthropic investors, foundations, and so forth. And so that's basically it requires a collaboration between different kinds of parties, which is one of the things that makes blended finance a little bit more difficult than ordinary investments. So that's also a reason why some asset management firms haven't really gotten involved in this space. But I think that that's a barrier that is relatively easy to overcome for an asset management firm. It's a question of, I think, allowing your staff to engage more with development banks, with pension funds, with government agencies, and so forth. And then that interaction and sort of extended networks will allow more blended finance to happen.
Yeah, sounds like it definitely needs to gain more traction, as you say. And for those private sector investors, then, so you mentioned risk. What are the risks when it comes to blended finance? And can it reduce risk? Can it increase risk? And what are their main motivations for getting involved, as you say, if it's a little bit more questionable when it comes to the financial returns and a bit more about the impact itself?
Well, I think there are many reasons to get involved in this. So, first of all, I think there are many clients like pension funds, insurance companies, sovereign wealth funds who have an interest in impact investment and have made commitments to investing sustainably. Have often made commitments to investing towards the Sustainable Development Goals. Obviously, they often turn to asset management firms for the implementation of their investment strategies. And I think that there is, or there will be soon, a good market for this sort of thing. But also, obviously, many asset management firms in their own right have made these commitments, have signed up to the PRI, have made commitments towards sustainable investing, SDGs, and so forth. So this is simply one of the more effective ways that you can do all of those things. And so it seems to me that that would also be a reason for asset management firms to put this higher on the agenda. But to answer your first question about the risks, so it varies obviously what risks are involved, but most projects where blended finance can be a solution are in developing markets, in frontier markets, emerging markets, and usually the risks, investment risks, are more pronounced in those markets than in Western or more developed markets. There are many different types of risks that have to do with currency, with sort of political uncertainty, or with the lack of legal structures, for example. What is crucial about blended finance is that usually the fact that a public sector investor comes in, like a government agency or a development bank, often also by providing a guarantee or by agreeing to take the first loss if something goes wrong with investment, that greatly reduces the risk for the private sector investor, like a pension fund. And so often in examples that I'm familiar with, for example, a guarantee will be given by a development bank that is backed by a national government, which effectively makes the investment equivalent to investing in a government bond of that government. So this is highly simplistic, but that's just to get an idea of the types of risks involved, and also that it's relatively easy, or can be relatively easy, to then reduce or mitigate these risks.
Makes sense. And you led nicely into my next question about, where this is happening, what kind of regions we're seeing the most action in blended finance. And I think it makes sense, as you say, that it's in developing markets and frontier markets, because that's where they require the most intervention on the ground from environmental and social point of view. But looking at where the actual asset owners, the pension funds, the private sector investors are originating from, where do they tend to be based? I imagine a lot are in Europe and America. So could you just sort of shine a light on who the key players are in this market?
Yes, exactly. As well, you've already answered the question. So indeed, they do tend to be based in these more developed markets, which is also because most of the world's large investors, like pension funds, insurance companies, and so forth, happen to be based there, which is because in the 50s and 60s, that's the countries that actually set up these these pools of capital, and obviously in many parts of the developing world we haven't seen that, or it happened much later. So the big pools of capital happen to be in these more developed markets, and so that's also, I think, where most of the blended finance work has been done. But so it's a little bit ironic, obviously, because the most pressing need for these projects and for this type of financing is, in fact, for the frontier markets. If you look, for example, again, at the Sustainable Development Goals, to the extent that you can even kind of measure this or figure this out, my own guess is that 90 to 95% of what will be needed to meet the Sustainable Development Goals is going to be in frontier markets or emerging markets. And so a further irony is that many large pension funds into the Western, more developed markets do in fact not allocate to emerging markets. So that is also a barrier to doing further blended finance. So I think one of the ways around this is that even though many blended finance projects finance activities in emerging markets, if you get a guarantee from the Dutch government, for example, or from the UK government, that effectively makes it more like a an investment in the the sovereign category. So there's also, I think, often there's these perceptions that, oh, it's emerging markets. Well, we don't do emerging markets, so we cannot even investigate this investment. Whereas if you have a very simple change of framing or of reference, then it can become something that asset managers or pension funds can actually look at.
Yeah, very true. And like you say as well, with the Sustainable Development Goals, that can cover absolutely anything. So I think when people are deciding how to invest in impact, it's quite a big question as to how you define it and which part of ESG you want to focus on. So
Yeah.
given blended finance is quite niche still, considering it's such a big part of, moving towards sustainable development, are there any kind of key initiatives that you think have kind of stood out in terms of being well put together and having a really meaningful impact?
Well, I'm familiar with a company that is based in the Netherlands. It's called Climate Fund Managers. They were one of the first, I think, to set up a blended finance facility at scale. It's called Climate Investor One. Since then, actually, they've launched another fund. It's called Climate Investor Two. There have been similar efforts, but as far as I know, none at the scale that they have achieved. And so I think they've really been able to demonstrate that this can be done at scale and in a way that it's backed by a number of national governments, a diverse group of private sector and sort of quasi public sector investors have made investments in their funds, and they've managed to fund. They fund mostly renewable energy projects in Africa and Asia, and they've managed to develop a significant number of projects in those regions, and so demonstrating that it can in fact be done. But the CEO of this company once told me that to really make traction and to make a bigger dent in problems such as climate change, we would need like 1,000 of these companies or of these funds. So it's nice to have this model and to know that it can be done and how it can be done. But now it's a question of replicating them and really executing on this model.
Yeah, as you say, it's nice to see that it is indeed possible. It's a shame that there aren't as many operating at that scale. But I think, lastly, then, if you had to give advice or kind of project how we're going to increase blended finance, would you say that it's the governments that need to take more responsibility? Is it the private investors themselves? Like, what do we need to do to get to that level?
Yeah, it's kind of all of the above, I would say. But certainly, I think governments can play a very important role, I would say, especially by convening parties. I mean, that to me seems to be the biggest barrier. That we seem to have projects, we have capital, certainly we have the knowledge and the skills to put all of these deals together, but all of these things are in different places, and those different places or organizations don't necessarily work together or know each other. So often people in development banks have in their mandate also to mobilize private capital. However, they don't know the people in the large asset management firms, in the banks, in the pension funds, and so forth. And so that seems to me a role that the government could really play to create hubs, set up conferences, figure out ways to convene and to really bring these people together. And then I think that's not necessarily going to be enough to scale up the blended finance market, but that is a very important condition. And I think also another thing that is more for the pension funds, insurance companies, asset management firms, I think they could do a lot more to allow their staff to simply learn about these things. And I think often, in my experience, investment people, finance people, lawyers have a lot of relevant expertise and would love to bring that to bear in working on these kinds of projects, but it's simply not in their job description. And no one comes to them with these projects. And my experience, when you do, you say, hey, you have experience investing in sovereign bonds, or you have experience in structuring, complex financial deals. could you help me out, spend an afternoon working with these people? Almost always people say, yes, I would be delighted to that. And you're the first person to ask me this. So I think if we would do more of that, and if there would be an understanding at management and board level that this kind of project and financing and allowing people to work on them can really be impactful, then I think we would see tremendous progress.
That's very true about making education important in the industry itself. So hopefully we can kind of facilitate a bit of that, like at our ESG conference coming up. Put more conversation on blended finance and all the relevant stakeholders. Because I know a few companies that are doing some good things, like AgDevCo. They have a really interesting blended finance model. So it would be great to maybe get some of those participants included too. But yeah, thanks so much for sharing your insight. It's been great having you, and I look forward to seeing you at the event and connecting with you to hear about this more.
Yeah, looking forward as well. Thank you very much.
Thanks, Harold, and thanks everyone for watching.